Greetings, everybody. This is Jeff Scott, and this is my top-down review today, January 24th, 2021. If you're watching this on YouTube and at the end you decide you liked it, please hit the up thumb. Apparently, if I get enough people to do that, I'll actually show up in more people's inboxes on YouTube, and maybe I can grow my readership or viewership, whatever you call it. And if you have any comments, questions, fill them in under the remarks, and I'll be happy to respond either directly or potentially via an email if you have your email address there as well. All right, make sure I got everything set here, and let's go. I titled today, Markets Extended Near All-Time Highs. Well, it's not doing the right. As earnings season takes off. This is for educational purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. Keep that in mind. I am independent. No one pays me to say good things about them or bad things about their competition. I paid at some point for the tools that I demonstrate. And trading involves risk, and you alone are solely responsible for any investment decisions you make. I always entitle my education, Be Your Own Guru, and here you can see a number of the folks that I've learned from over the years, and how I trade is how I trade. It may work for you, it may not work for you, but it's the style that's worked for me, and I think it's important that each and every one of you get exposed and learn from many people, read education, seminars, etc., and then come up with what is your style. I own a lot of software, TradeStation or Thinkorswim with these, the various indicator sets I use are on my computer all day long. HDSI and EdgeRater are my go-tos for analysis and analytics, especially after hours. The yellow is important. I'm never paid by any vendor when you buy something that I suggest or use. Anytime they offer me an affiliate fee, which is usually a referral fee, it's passed on to the purchaser as a discount. I take no money. I am an unpaid volunteer. This should be just what it is, pure education. Here's the website for HGSI. Again, I have no commercial control, ownership, interest. I don't get anything when you buy it. Free 30-day trial, no credit card required, and under investing strategies will be lots of videos by myself, Ron Brown, and others. So where are we in this market? I trade growth stocks, and growth stocks go up like rockets, as Ian used to say, and they fall like rocks. And we've seen that. I watch on some of the various boards I participate. Now becoming Discord sites, Skype chats, etc. And everybody will be crying because they're getting killed one day. And it's just that growth is out of favor. It happens to me too. When growth's in favor, I make a lot of money. When growth is out of favor, I have to either get out of growth or take it on the chin. This was a week to be in growth. So, are we about to go on to a new leg higher? Well, you know, we're at all-time highs in this market. We hit them on Thursday, all-time weekly highs. And when you see that, it's hard to say we're in trouble. Everybody, almost everybody, will say we're extended and we need to correct. But if you look over 20 or 30 years at the Dow, at the NASDAQ, we're just at a level that we failed multiple times before, and a breakout above that level is not bearish. It's very bullish. So I think we're sitting up here at the top here, and we're not certain whether we're going to take another leg up or we're going to break down. And we've been there a lot over the last couple of years. I've said it before, I'll say it again. It's really easy to make money when you're at a bottom and you're starting to break out. You might be late to get in. Who cares? You'll make plenty of money. And I guess it's easy to make money if you know the market, you're in a bear market and it's falling and you know not to be long, you know to be short, although it probably takes a while to figure that out and you lose money in the beginning. This is a market that's had a long run, and I hope you've made a lot of money. And it's a tougher market now than it was when we started this bull run. Go back to March of 2009. Throwing darts made you money. So I've sort of Not done what I'm supposed to do, because if I'm uncertain, I should be raising cash, smaller positions, and selling premium. Early in the week, I went really all in, and I had a great week because of it. I ended the week by buying some protection. What do I mean by that? It means I bought some spider puts, some SQQ calls, some VXX calls, just in case something happens over the weekend, and I will be quick to cover those on Monday if the market is stable. Think about Friday. I mean, I woke up Friday and my trading account was down probably $350,000, which is about 10% of my trading account. Now, most people would go crazy, but I'm used to that volatility. And by the end of the day, I made a few good trades and things recovered, and I ended up being up 5% on the day. So that's a volatile day. That's not a normal day. So I'm a little nervous, but the same token, I look at the minus 350 to plus 150 on my portfolio. That's a huge swing, and that's a big bullish move. If I look at the sectors on Friday, these are closing prices. Here's materials, energy, financials, industrials, and so on and so forth. Where's the strength? I got a lot of neutrals. Staples looks neutral. Discretionary, close to neutral. Utilities are neutral. Real estate is neutral. I got a lot of red up there. So if it was a painful day for a lot of you, and it sort of makes sense why, it was not an easy day. It's just the groups that a lot of us growth stock investors are in did well, and part of that was the resurgence in big cap tech. Let's take a look in Thinkorswim at some of the, there we go, major market indexes. I'll find the one I want, and there it is. So we're going to start with daily charts, and let's go down, and these are futures. I look at futures sometimes. I look at cash indexes, and I'll try and tell you what I'm doing. Here are the lows, probably March 23rd. I've done this enough times. Here's the highs, probably February 21st or something. I don't know why this is in the way. Try and move this out. And, you can clearly see just a massive move up. We hit the all-time high intraday and closing high on Thursday. Sold off a little bit on Friday. This is the S&P 500 futures. How can you not be bullish on that? I mean, they clearly went through a sideways move here. And are we breaking out again, or will this be a false breakout? That I can't tell you. NASDAQ futures, all-time highs on Thursday, kind of a nothing day on Friday. And again, the resurgence of big cap tech has to influence the NASDAQ 100. The Dow, it had a tougher week, and you could see the Dow is in that sideways congestion here. It's in a person buy signal. It's at all-time highs on Thursday, and then sold off a little bit on Friday. Technically, that's a low close doji. That's a bearish signal. But again, it's above the green, which is a 17-day moving average, the yellow, which is a 50, and the red, which is a 200. Pausing to refresh after some of these moves off the bottom would not be a bearish phenomenon. The Russell, talk about the monster of the market. For so long, we were sitting here and the Russell's lagging, the Russell's lagging, the Russell's lagging. And then you go back here, which is late September, and the Russell woke up, and it's been the leader in the market resurgence. And I started noticing that on days that the Russell led, I underperformed. I remade my portfolio. I was heavy in big cap tech and underweight at small stocks, and now I'm probably more neutral. But the market character changed. Again, how can this be bearish? All-time high on Wednesday. Looks like we had a closing high all-time on Friday. Beautiful market, beautiful market. And the other thing that we might be forgetting is where the NASDAQ, the S&P had hit, and the Dow hit all-time highs in February. This was 3-year highs that broke out, and they didn't occur back until the middle of this run since September. So Russell also at or near all-time highs. What's confusing is the VIX, and here's VIX futures. The VIX was living down here in the 13 to 15, 14, 16 range, and then now it's living in the 23. Does that increase in volatility reflect danger, and should I be more concerned? Or is it just a reset in the new normal? It's not doing anything too active right now. And then the dollar, we talked over the last couple of weeks that it was rebounding. It actually had a sell signal on Thursday. If I want my small stocks to continue going higher, I think I want the dollar to go lower. I think a lot of the move in the small stocks came as the dollar has broken down. So that's the dailies. I'm going to go back to the PowerPoint because I'm not convinced that the weeklies are going to give me that much more information here. There we go. And you could see on the weeklies, all-time highs on the last bar, closing highs, and all-time highs on the E-mini, the NASDAQ, the Dow, the Russell. So all major indexes on the weekly charts hit all-time highs. Rates, you know, they gave back. You can't see it well. There's a little nubbin. They pulled back a slight bit. But when I say slight bit, it's almost microscopic, and you could see the strong uptrend that rates have been in. Rising rates are good for banks, especially regionals and insurers. AD lines, all-time highs, being matched pretty much by the indices. On the left are the small and mid caps of the Russell 2000. On the right, the large caps of the Russell 1000. If I look at the, what did I do that? 2 cents. At the NYSE and this NYSE AD line, all-time highs. If you look at the major market ETFs, all except for transports, right at all-time highs. And the only thing that's not an all-time high is TLT, which has come down as rates have risen. What about breadth? Breadth came down in some measures. Stocks above the 200 tickled down a little bit, but still very strong. Again, at multi-year highs, and you know, when you're at multi-year highs of breadth, you worry about extensions. If you look at stocks above the 40 days, that's a little faster moving. It came down quite a bit more, but still at very high levels. And if I look at the 3-month new high, new low, the T2121 indicator in TC2000, it shot back up. It's not at the top, but again, it's at a level of extension that reversals can occur. The daily McClellan, speaking of reversals, look at the summation index. And I guess if you are super bullish, then you want to see the summation index break above this line because it's just failed there over and over and over again over the last several years. We look for extreme readings, we look for divergences, we look at zero line rejects, and what I'm just seeing is we're rejecting the prior highs on the summation index. On the weekly, similar picture down here. We broke through the zero line. There's clearly been divergences with higher highs here and not higher highs on oscillators and summation indexes. When I look at more measures of extension, Ian taught us about the S&P 1500 buckets. You take all the stocks in the S&P 1500 and you divide them up by percent B. 0 to 10% would be 0.1, to 20, 0.2, between 20 and 30, 0.3, 30 to 40, 0.4. So you can divide up the Bollinger Bands into 10 slices. Then you have a slice below and a slice above. And then you could also look at the stocks of the S&P 1500 and say how many are above or below their midline of the Bollinger Band. So note to Sagar, if you're watching this, can you put this into Edge? So what happens is I hit a button and I know almost immediately what percentage of the stocks in the S&P 1500, although I suspect you could really run it on any index, and Edge Rater you can, what percent are above the midline in their Bollinger Band. 73% is a very bullish but not excessive reading. But more importantly, when I start to see the stocks above, greater than 1, or below, less than 0, below the Bollingers, above the Bollingers, when I start to see these going to 25, 35, and 40, again, another sign of a reversal. And intraday, that could be very helpful if Sagar could program that. Hindenburg omens, these are sort of folklore of markets and trading as taught to me and others by Ian Woodward, who learned from others. The Hindenburg omen is a constellation of findings on the NYSE that when they all occur, it triggers a signal that's rarely seen. When you see the Hindenburg omen, it's very likely at the minimum the market's going to pause. When you see multiple omen signals fire, you really got to pay attention because there's a high likelihood of a reversal coming. And there has not been a major market correction since the Depression that did not occur after a Hindenburg omen. Now, you don't see Hindies until you start getting excessive exuberance in the market. Perhaps one of the signs that we're not topping yet is we don't have any Hindenburg omens. I scan these on a daily basis. I find them in HDSI, I find them in EdgeRater, and I'm looking for the Hindenburg omen column to say yes, and we haven't had one in months. Market tone, the Woody indicator, percent B times bandwidth, almost all positive. The only one that was weakened was the Dow, and that's neutral as we saw on the Thinkorswim charts. Now, on the left is an analysis in EdgeRater where I take a view of the HDSI database that I saved as an HTML file last weekend and ask the question, based upon various parameters, how did the market perform going forward? So this is a prospective analysis in both of these based upon data decided upon a week ago. So the first question I always ask, growth up, growth down. I had a great week. I can assure you it was a growth up week. What you have here is a chart looking at percentage gain and ERG buckets. ERG stands for earnings per share rank plus relative share rank plus group rank. And if you do it on a scale of 0 to 100, you could have 99 is the highest number, and 99 times 3 is 297. This gray line here is important because it shows you that there are very few stocks below 40 and there are very few stocks above 270. So I throw those out. And so I pretty much want to look at the meat here. And what does the meat tell me? The meat tells me that high ERG stocks had a much better weekly performance than low ERG. Now, up here is just crazy with some stocks up 30, 35%. But the reality is when you see a lot of the market up between 5 and 10% in 1 week's time, that is a massively strong stock market. EPS rank, the higher their earnings per share, the better the market performance. This is the weekly performance. For someone like me that's a growth stock investor, that is music to my ears. Interestingly, relative strength rank, high relative strength rank had great performance, but so did stocks that don't have earnings. Some of these SPACs and some of these other IPOs still doing very well. So these are not necessarily junk off the bottom, but there may be stocks that have not been around long enough to establish a relative strength rank. Group rank. Your group, better the group, better the performance. Now I will tell you that I include every stock in the database that's above $2.50 and 250,000 shares in this analysis. So it's a pretty big database. Now this is somewhat bothering. Stocks that were distributing the week before, the D's and E's outperformed. Well, if you watched me last week, it was growth off. And I got hurt last week because growth did not do well. So those growth stocks that were distributing a week ago were accumulating or moving this week. Now in HTSI, there's a tool called the group performance analysis. So every week on the weekend, I create a large number of groups. In fact, I take all the stocks in these groups, I dump them into one large file for bulls and a smaller but large file for bears. and I look at every one of those stocks manually, one after another, to come up with my plan for the week. You know, I don't, people have made comments that I make great returns so it looks so easy. It is easy, but it requires a lot of homework, and I do most of my homework on the weekends. So first thing I find is the S&P 500. On the week, the S&P 500 was up 1.91%. Wowzer. Think of 1.91% times 50 weeks. All right, because 52 is too hard math. That's almost, well, it's 100% return on the year. How likely is the S&P 500 going to double in 1 year? I'd say about 0 chance. So that just tells you this was just an outsized, super strong week. I look at the I look at the growth markers of the IBD 50. It was up 3.59%. Very strong week. I look at the weekend review, which is the top groups and the top stocks in the top groups, was up 3.07%. And the Market Smith 250, which is actually about 300 stocks, was up a little bit over 3%. So that's my bogey. Now, I look here at my stocks. I said I had a great week. I was up. My mixed long and short portfolio was up 6.1%. And if I look down here, my new buys were up 239, and some of my filtered buys were up 0.6. My buy list is more mixed of what I think might work next week, and it may or may not reflect what's in my own portfolio, and I buy selectively from that list. I like it when my buys are leading. I really like it when my current holdings are leading. A very strong week indeed. Sector strength, staples, which is one of the defensive plays, remains weak. Otherwise, the industry groups look very strong. If we look here, these are from Sagar's Q tools. Some of my favorite things to watch, especially intraday. So if he could do those buckets, I would just go crazy happy. But what you have here are 3 views, monthly, 10 days, or 2 weeks, 1 week, 2 days, and 1 day, of all the stocks in the S&P 1500. And we can tell you over what percent on those time frames of the sectors were up, what was the industry advanced decline, how many up, how many down, and the same with stocks. So clearly this market has deteriorated from where it was a month ago, but it's better than it was 2 or 3 days ago. So you could see that on Friday, at least in the S&P 1500, the sectors were all up. 2/3 of the industry groups were up, but only a little bit more over half of the stocks were up. So even though I talk about how great of a day it was for me on Friday, it may have not been a great day for everybody. Then I can look at the various, so sensitive, sectors here, and in blue, every sector's been up over the last month. In green are 2 weeks, and 9 out of 11 were up over 2 weeks. But this week was sort of a 50-50 week with 6-5 winners over losers. And you could see the winners and losers in brown, and well, I guess that's sort of reddish brown. I think the scary part for me, or not the scary part, but the tough part is, look at energy. Over the last week, it was down a lot. Over the last month, it was up the most. And if I look down here on a 1-day performance, even though it was the most down for the week, it was the most up. This is ranking, relative ranking, top to bottom of the sectors on Friday. Energy, leader, medium, bad, leader. Energy's been all over the place, and I think energy is probably one sector that's most closely tied to the performance of the vaccine and shutting down or not shutting down. Energy being up on Friday was a surprise, considering what pulled the market down was the EU saying they may have to shut down more. Oh, sorry about that. Finishing at 30,000. Siri decided to participate in my weekly review. Sorry, Siri, but you're not invited. Let me go back here. So you could see communication sectors has been extremely strong over the last 3 months. Healthcare is starting to get strong. And then IT, this may be a one-day wonder. It's been very strong. Materials, including gold, has really weakened. Utilities, if this market was going to be rolling over, wouldn't the utilities be up closer to the top? Staples down here. So a lot of the defensive stuff are down here. The one that doesn't make sense is information technology. Perhaps IBM earnings is behind that. Canaries in the coal mine, yes, price line is now called bookings. But if you look at the artificial index that Ian created 5 years ago of his canaries, the leaders, to give you a clue of what was going on in the market, from August of 2020 until November, the canaries, which had been leading off the bottoms, just went sideways. That's when the small stocks were doing well. And then all of a sudden in November, the canaries took off. The canaries remain just below all-time highs. Again, how can you be bearish when the canaries in the coal mine are chirping like they've never chirped before? Know your news and earnings. This is probably the danger slide of the day. Monday, nothing. Tuesday, you got some house prices, confidence. Wednesday, durable goods, capital goods, FOMC meeting announcement with a Powell conference. So anytime Jerome Powell is speaking, it's a potential major market mover. But we already know what he's going to say. Some signs of improvement. The economy still weak because of COVID. Needs more fiscal help from the government, and no plan on raising rates for forever. If he changes any of those tunes, yeah, the market could be in trouble. If they say they're going to start buying stock ETFs to invest in which they've done in other parts of the world, the market will go crazy. I don't think that's happening either. We got a lot of jobless numbers on Thursday, and then some inflation numbers, PMIs on Friday. Again, since we've got Fed heads speaking on Wednesday, it's a busy news week. To impact the markets. The big news is on the right. Please pay attention to my quote in the lower right-hand corner. Other people may have said it. I've been saying that quote for a decade. It is a judgment call to hold stocks over earnings dates. It's a bad judgment to not know when your stock's earnings date is scheduled. This is a very, 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 did I say very busy week for earnings? The only thing that surprised me is Amazon used to go the same week as Microsoft and Apple. Amazon's pushed back a week to next week. But there are a lot of major stocks, so I wouldn't blame you if you paused it right here. You make it bigger for the last couple seconds. If you paused it here and saw which of your stocks have earnings this week. You got to know when your earnings are, because there's nothing that is likely in one day to move your stock more than an earnings announcement. I think the rest of this quarter will be dictated by the next 2 weeks' earnings. That if the earnings look like Netflix, then this market's not going to be stopped until it's a lot higher. But maybe Netflix was unusual. By the way, Netflix earnings trade worked again, as we talked about over the last couple of weeks. So, short trading week, renewed strength in mega caps, outperformance of the NASDAQ on the week, S&P up, Dow up, and Russell up. Each index, as I showed you, setting new record highs. Apple, Microsoft, Amazon, Google, Facebook rallied between 6 and 9% this week amid positive-minded analyst recommendations and an appreciation from Netflix's earnings blowout. Netflix shares surged 13.5% on the week on a $500 plus stock. That's a big move, especially if you're playing call options. Here we are, and I'm pretty proud of how I've done this year. And the Russell's up almost 10% year to date in 4 trading weeks. That's unfreaking believable. News flow likely again to dominate. Will we get lockdowns, COVID variants, vaccine rollout woes, Biden stimulus? Can he get it through? And, I heard some comments from smart people that maybe COVID's going to peak this week. Friday, as I mentioned, I got clobbered in the beginning, and then it just kept getting stronger and stronger, and had a great finish. Had a great week. I'm up over 30%. The press will continue to debate whether we are at the end of the bull market or just the end of the beginning. For me, I have to play the market we have, although with a big earnings week ahead, I'll be paying attention to see how the market reacts before committing substantial additional funds. All right, we're halfway through at 30 minutes. Now, a lot of people who are newbies wonder, man, you spend a lot of time looking at the market. And there's a reason for that, and a very big reason. And the reason for that is bullish, bearish, I don't care what you are. But I can tell you one thing, and that's 50% to 60, 70% of what your portfolio does tomorrow and the next months is how the market does, not how great of a stock picker you are. If you are a great stock picker, that helps. But in a horrible market, great stock pickers fail. And in a great market, even bad stock pickers can make money. So very quickly to look at, again, at the futures, I have a couple things I look at in TradeStation on the market, 6 or 7 points here. I'm going to go very quickly. Point number one, am I in a green arrow, which is a buy, or in a sell arrow, which is red? I'm in a new buy, I'm in a weekly buy, I'm in a monthly buy. Check that off as good. Then what is the color of my paint bar? If I green, which is I can be buying aggressively or holding, not shorting. If it's red, I should be shorting but not buying. And if it's blue, I can do whatever I want. I think that's blue on the weekly, green on the monthly. So I'd say mixed bullish. Third thing, am I inside the envelope? If I am, I go forward. I'm inside the envelope. Fourth thing I look at is these red dots that come up on the top here. These are telling me I've got MACD divergence. Well, how do I know that's true? I know that's true because here's the MACD and I got higher highs here, higher high here, and the MACD hasn't even moved. So that's a negative. Another negative here is the Laguerre RSI has fired here, which is a bearish signal. But I got to take the marriage of the signals. I'd say that signal's already failed at this point. High jumps at 76%, and my weekly bond goes green. The totality of that is I'm still bullish on this market. I look at those signals every day and gives me a sense of the market. Let's just go very quickly. So that was the S&P futures. Let's look at the Dow futures. Buy, 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 blue, 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 lots of dots. 60%. Laguerre RSI is fired, but the market's already started to move back up. I would say less bullish, but still bullish. Russell futures. Buy, 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 blue, lots of dots. 88%, so getting a little bit more extended. Up at the top of the envelope. No surprise that this one looks a little bit more bothersome than the S&P. It's a little bit more extended. It's been the big leader, but things have a tendency to get even more extended. And the NASDAQ futures, again, above the envelope, green in buy signals across. Only, I can't even read without my glasses. Sucks getting old, but it beats the alternative. 66%. So the only thing that's negative, all of them, the RSI, the Laguerre RSI is turned down. But all of them are higher than that happened, so they've negated that signal. Look, we've had a market that's had a huge run. Look at this, almost vertical on the monthly. That can't go on forever. It's going to end. I don't see any signal that says it has to end tomorrow. It could end. It'll probably be a big news event when it does end. All right, let's go into HGSI. Now we're going to move into the cash markets and look at indexes and not futures. Start with market analysis user groups, Major Markets Plus. And this is going to open up a lot of different either indexes, copies of indexes based upon certain things are probably copyrighted, and then a couple of other things I like to look at. I'm going to rank them by top-down analysis, and what this does is it brings the ones that over one day more than 5 day, all price and volume. What's been the big leaders of the market? What impacted Friday? Well, the reason I made a lot of money on Friday was when the small caps, the NASDAQ, the Russell, the FANGs lead, I make money. So growth was in charge. What didn't work, utilities, gold miners, silver, interestingly, semiconductors fell off some, gold, industrials, utilities. So growth, small caps, NASDAQ stuff, in charge. All right, let's look for the spiders. I don't know why they call it pseudos. I suspect there's some copyright issues or not wanting to violate copyright issues. I like having two charts open, so I open up a second chart. Whatever indicators you want to use, you should use. I use what works for me. You use what works for you. I like this one to be a weekly chart. And, okay. Tell you a little bit about what's on this chart, because if you're just finding this by chance, you're going to like go, really? And you're going to hit stop and you're going to go somebody else's video. So first thing is, if you've not watched this before, if you're new to our community and you are confused as to what the heck I'm talking about, and this is not something to put in the remarks in YouTube, email me, hgsidoc@gmail.com, and I will send you a PDF and a video defining everything that I use as indicators. The second thing is you may or may not have these exact templates. Like one of these days I'll probably add them to HGSI. But as I said before, I'm independent. No one pays me to do these, and I've got a day job. So when I get to it, I get to it. Third thing, remember I talked about the Hindenburg Omen? These little red things up here are how I plot the Hindenburg Omen in HGSI. And I just want to show you something because it's confusing. And I get calls all the time that theirs doesn't look like mine. I created a new window called the Hindenburg Complete. You can call it whatever you want. You notice I've got the indicator in here twice. In the first one, it's using the all NYSE index view. And in the second one, it's using the bar chart market indexes. Somewhere along the time, HGSI changed their provider of indexes, and you have to know which one to have based upon the time. I just put them both there, so I pick it up no matter what. So notice what happened last February. Markets, I could tell you that that's today, couldn't I? Could I tell you that this is today? Hopefully not this. But doesn't this look like where we are right now? Absolutely. And how would you know to be nervous? These are Hindenburg omens occurring the whole way up. Omens, pullback. Omens, pullback. Omens, pullback. Where's the Hindenburg omens today? I haven't had them in a year. We're going to get them. We don't have them yet. Now, let's go back over the years. Let's go. Okay, now we're in 2019. We just looked at. Oh, is this a time limit? I don't have enough data on this one. All right. I'm not going to go and reset my time. I think I've only got a couple years of data. I could redo the chart with more data. The point I was going to make is if you go back to 2007 and 8, you are going to see Hindenburg Omen City before the market rolled over. I pay attention to these, put them on your chart so you don't miss them. When you see them, it doesn't mean you got to sell off. But when you see them, you start to raise cash and be aware that a market sell-off could be coming. Remember what I said before, since the Great Depression, there has not been a major market sell-off that was not preceded first by a Hindenburg Omen. The problem with the Omen is, did you really want to sell off all your portfolio on this pullback? No. On this pullback? No. On this pullback? No. Well, maybe you do. It depends on how short-term trader you are. But boy, would have liked to have been out of your portfolio on this one. So I will sometimes filter it by the 50-day moving average. And when it occurs above the 50-day moving average, I look for a break of that average. But you also lose some of it. But if you got out of the market last February when it broke below the 50, you saved a lot of money. But you have to just be aware that that exists because it's a real signal. The next one down here is the bongo. The bongo is a series of RSIs and moving averages. It's calculated on the weekly price no matter what I'm showing on the chart. And the weekly bongo is a great long-term trend indicator. My trend is up, and you could see during pullbacks. And again, it goes red, not at the beginning, but it goes red early enough that if you gotten out there, you would have done well by it. Third thing is the high jump that I was just looking at. Stocks like rubber bands will only stretch so much before they break. So when you're up to these dotted lines at the top, you're stretched too much. When you're at the bottom, you're going to bounce because you've fallen too much. So I can look at where we are on the high jump. We're not maxed out on the S&P. In the high jump bar are red and green lines. The red lines are called red candle highs. A red candle high is defined as you have the highest high in the last 10 or 20 bars, and then you close down on the day getting a red candle. So if you look how often you get these red candle highs, a lot of times they turn out to be either at or near reversals. Green candle lows, that just tells you opened low, lower than the last 10 to 20 bars, depending on which one, and you closed up on the day, hence a green bar, and that could be a sign of a reversal as well. Then you have buyable gap ups as defined by Morales and Katcher. That'll trigger green if you have one. Are you in a Keltner channel squeeze? This is similar to what John Carter uses for a squeeze, but not everybody uses a Bollinger Band squeeze inside the Keltner channels. I do not believe that John Carter created that. He adds a rate of change momentum to his. I don't have that here, and this is not a multi-time frame indicator. These here are MOBO breakouts. MOBO breakouts were something defined by a guy named David Elliott, may he rest in peace. And a Bollinger Band is not a trading system. A Bollinger Band is a range within which a volatility, a stock will spend 90 to 95% of its time. When you're above the Bollinger Band, it's a sign that you're probably going to pull back into it. When you're below, you're going to probably go back up into it. But the MOBOs change the settings and turn it into a trading system. On the price chart here, these little dots are the Wilder PSAR. That is a trading system that others might use, and I find that it gives me a sense of stop placement and buy stops if I'm below that before I get into a position. This green line here that I'm pointing to, these are chandelier stops, and you could be above it here. Also could be used as a buy-sell signal. I use candlesticks. Sometimes I forget to tell you the gray bar, which you won't see here. There's sometimes a gray line, which is the industry group. Looking at the S&P 500, you're not going to see a gray bar. For moving averages, I use one exponential average, which is the magenta, which is the 8-day exponential average. It has been promoted by Stephen Bigelow as the T line, and he likes to use that as a place to buy when it goes above and cover when it drops below. A little bit too tight for my style of trading, but still a very good signal. The green is a 17-day moving average. When you are tracking on the 17-day, you have a very strong market. The 50-day we also call free parking. For many people in the market, the 50-day moving average defines a stock that's working versus not. The 200-day, I never want to be buying stocks that are below the 200-day moving average. It's a pain point. Frankly, I don't want to be in stocks that are below the 50 if I can avoid it. Buying pullbacks to any of these moving averages or other support are a way that I like to make money. Coming down here, this band here is the John Person buy and sell indicator. Here it's turned into a ribbon. because it stays in that signal until it's an opposite signal. Up here you can see it's a chunky little arrow that I've got placed in there. This here is John Person's market catcher. It's a comparison of relative strength of your instrument versus the S&P 500. It doesn't apply when I'm looking at the S&P 500, to be honest. Then we have this white thing here, which you hardly ever see on an index, our Morales and Catcher pocket pivots. Then you get the volume window, which you don't see volume on the S&P 500, but you have what's called the Eureka in green and Phoenixes in maroon. I've got one set up on the NASDAQ, one on the NYSE, so I've got two here. You don't need to do that. The deeper the green, the bigger the signal. The deeper the maroon, the deeper the signal. These are the follow-through day to the upside or downside, the green and the upside, red to the downside. And lastly, a regular volume window with what we call kahunas, which are percent beat changes. The light ones are 0.24 or more. The dark ones are 0.4 or more. And they represent significant moves on a day. And I want to draw my attention to it. I'm all about momentum. Everything here has to do with momentum. The squeeze shows me stocks that have been building energy and ready to break one way or the other. Now, forget all the names. Green is good, blue is good, red is bad. Simple. Green is blue, green and blue are good, red is bad, and use that for trading. All right, so now that you know all the indicators, let's look and see. What do we have? S&P 500. We have the 138.2% retracement, so this could be a natural fib extension of where you might expect the market to reverse. Again, we had all-time highs 2 days ago. We'll be watching it here. We stumbled and took a while to cross above the 127. So if we went sideways and then we broke out, be okay with me. Our moving averages are lined up 8, 17, 50 to 200. The chandelier stop is below. I've got no red on the right edge, so that means I'm very happy and bullish. So I would say the S&P looks fine, but let me just put it out and say it right now. We are extended, and when you're extended, you eventually will pull back. Do we have to pull back tomorrow? I don't see those signals today. We could. I just think we go higher. That's the S&P. Let's take a quick look at the Dow Jones Industrial Average. It's going a little bit sideways here, as we showed you before in Thinkorswim. Notice it's in a person sell signal. It's got some pocket pivots to the downside. It had some red candle highs, but still in the weekly bongo green. So the Dow looks a little bit less strength. Here's a recent box I put in the interval between the close and the 10, the 50 and the 200. And they talk a lot about 4% above the 10 on IBD Live. So that's why I put this in. So you could see, go back to the spider. We'll come to that eventually. 0.7 above the 10, only 4% above the 50. So the level of extension is a lot more muted than you might think on those. On the Dow, again, it's below the 10, 2.9 above the 50. If I go and I look at the Russell, using the Russell 2000 ETF, very bullish day on Friday. As I said, like me, it opened up really low and closed back at the high of the day, had a great close. You could see up here that its relative strength is greater than the S&P 500. And notice everything on the right edge is green. Will it fall back someday? Absolutely. And I actually put in here the oscillators at 88.3 on the high jump. If I look at the NASDAQ composite, like the Russell, strong, had a gap up earlier in the week. All-time highs, everything is green. It's at 76%, so not at a must reverse level. Actually did have some pocket pivots. So strong markets only are strong until they decide not to be strong anymore. These are strong markets. I can't tell you what tomorrow will bring. I can tell you the markets are strong. Let's look at underneath the market. Let's see what else we can look at. Let's look at the IBD 50 fund, a managed ETF of IBD 50 stocks. Notice how, like the FANGs, it was mostly sideways and choppy here for a couple of months, now in a great move. All-time high on the 50 ETF. That probably reflects a lot of your portfolios. If you follow me, Notice that the high jump on the IBD 50 growth stocks is at 96.8%. So clearly this is a group that is extended. You can see the high jump bar is up here. A couple of comments. The Hindenburg Omen is calculated on NYSE. I don't care what chart it is. It's only looking at NYSE. And the Eurekas and Phoenixes down here, the follow-through days, are calculated on the NASDAQ or the NYSE. They don't change when I change charts. Everything else is dependent upon the chart that I'm looking at. What about semiconductors? I mentioned before that they were weaker, and you could see that semiconductors had a down day on Friday. You just look at the weekly, and you really have to negate the negative sounding commentary. Yeah, it closed in the lower half of the day on the week. It still was up on the week. Maybe these 2 weekly in a row wicks to the upside tell you that it's slowing down and maybe at risk. Well, I could have told you that anyways, 90% on the high jump. Biotech has been a monster, and I usually play LABU for biotech. I've got a lot of non-disclosures from my day job, and biotech had a tough Thursday but recovered a lot on Friday. So it's hard to see a lot of weakness in this market, isn't it? We look at the FANGs ETF, FNGS, it's a 3X. Yeah, you should have just bought this. I'm kidding. And here in April, when it took out its 200-day moving average of down here in May, and just forgot about it because it's gone up 3 times or more. What a move, more. It's gone from 50 to 350, almost. What a move. I can't say it enough. What a move. The monsters of tech, the big cap, the Facebook, the Apple, the Netflix, the Google, and I added Tesla and Microsoft here, I believe, and bookings have just done amazing this year. Amazing. US dollar, using the UPP ETF, or UUP rather, as I showed you on Thinkorswim, struggling here, maybe going to come back down. It ran up into major moving averages on the weekly and turned down. If I look at the VIX has done nothing. Now we stopped having the VIX here. I suspect there was a expense issue, but here's a VXX surrogate, and it's hard to get excited about the VIX. If I want to look at gold, with the weak dollar, gold, this might be a place to start buying gold. It's pulled down to the 200-day moving average. I'd rather have more than that, but I also had a green candle on both the daily and the weekly. I'd be watching gold here. This might be a nice time to start thinking about it. Silver, well above the 200, bouncing off the 50 looks more attractive. And then gold miners just have not been a place to be, totally broken down. I'd like to see them get above this area before I buy it, because until then they're just going to keep failing. All right, next thing I like to look at is industry groups to get a sense of where the money's going. I hit workspace here, or warehouse rather, and I open up 174 industry groups. 2-day force momentum to the upside, I have 62. How about to the downside? I got 11. What does that tell me? It tells me this market is bullish. All right, how about 5 days to the upside, intermediate term? 71, 5 days to the downside, 28. This is a strong market even underneath the indexes. So let's go to 2-day up, ranked by raw combo here. And the top industry group should come to the top. A top-down investor, and that's what I consider myself, will start with the indexes to determine in or out of the market, long or short. We'll then identify the top industry groups and then work down the top industry groups. Does top-down investing work? I showed you my returns last year. At some point, I got to stop doing this. My wife gets mad at me. I'm up $956,000 in 3 weeks. I started with $3 million. I've taken a lot of money off because I'm building some houses and some other things. I got some taxes to pay. It was a great week. And what else can I say? What a great week. I like making money. And this was a great week to make money. All right, that's about a 30% return, a little bit over 30, I think. So, industry groups. Number one, renewable energy. How many weeks in a row, or over how many months have we talked renewable energy? Plug Power. How many of you own Plug Power? Now, I have a lot of crap on my slides, so let's just do this. I'm going back some time. I see 1, 2, 3, 4 awesome buying opportunities. At least 3 of them are textbook in the way that I trade. Buying opportunity number 1. Here's a stock, and let's take it over so you can see what it looked like then. First thing, it's kind of loose, and I'll be the first to admit that. It did this, and I always talk about I disregard these. You get these high volume moves that are not sustainable. I like the next move that it takes. Why is this a buying opportunity number 1? You got to pull back to the 50, a mobile breakout from the squeeze, a buyable gap up on that day, a new person buy signal. The market had a green thing, which is a eureka, said the market's going to take off. And you had this dark blue kahuna, which is just a momentum move. That was a buy signal. Now, I do most of my evaluating after hours. I see that, and I put on if it takes out this high, I buy the stock. All right, that was a great buying opportunity. I got close down here, and notice off the 17-day moving average, I had pulled back. And what did I do here? I had a PSA reversal, a mobile breakout from a squeeze, the weekly bongo is green, a new person buy signal, and a kahuna. That was probably, of the 4, the worst buy signal because it didn't come down to the 50. All right, set your stop above that, and the next you've got to play that gap. Market continues. I'm back down to the 50. I'm squeezing. Didn't do anything. I'm not going to do anything with that. But I would on this day. A move off the 50, a squeeze, person buy, pocket pivot, and kahuna. Oh, another opportunity, a pullback to the 50, a mobile breakout, a person buy signal, a pocket pivot, and a kahuna. And it's gone. Now, you could have bought it here on a pullback, and notice the lineup of the yellow, the greens, the blues. You could have bought it here on a pullback. Harder to buy that one. I like buying them off the 50. So I am in plug, and I sold some puts and I bought some puts and sold some calls up here because of this volatility. But I'm long plug, not put, long plug now. And this has been a great return. Multiple opportunities to buy it. It's been on my list on these weekends forever. Sun Power, I'm not playing, but it gives you the exact same opportunities. Ocean Power Tech, I don't know what to do with this guy. It's a tiddler. It's a little stock. It's a very little stock. It trades a lot of volume, though. I'll get you to the volume here. 10 million shares a day, so it's got plenty of volume. It has something to do with putting big turbos or something out, turbofans out in the ocean and taking the energy from waves. It's late to the party, but boy, look at it on the weekly. Notice, and again, the price here, it's a cheap stock. I don't like this topping tails, but if I'm looking at this, I'm seeing a stock coming off of a squeeze. It had mobile breakouts, kahunas, lots of volume, new person buy signal. It's got all the things I like. I just don't like. Something bothers me with this stock. Very late to the party, but that's a bullish move if I've ever seen one. Here's the index. I don't normally go below the index. Let's keep going. Fuel cell. Another secret. You see all these blue lines, all these kahunas in a row as the stock's going sideways? When you see that, you got to buy it. I'll come out. Are they here?
Not yet.
All right. A lot of blue, sideways move, it took off. All right. Here you had a market follow through day, a breakout, a weekly bongo, and here you had squeezes and mobile breakouts. I'm in this one from this breakout, and look where this stock is today, up to 18. Fuel cell energy. Venezuela, I talked about this on my webinars. Back down here, I just had too many of the stocks in the group. I should have sold them and bought this one. 4 times 400% return in a month and a half. This is how you make the big returns. You got to find these stocks at good buy points and take them. Daco Energy, broken record. Pull back to the 50, a momentum and a breakout, multiple opportunities. These are all extended now. Solar Edge, not extended. Had a nice day on Friday after a pretty steep sell-off. I'm back in Solar Edge. Enphase, about to take out prior highs. I'm still in this one as well. I got very heavy into these renewable energies. Why? Because after 2 or 3 weeks of them being at the top, I figured that's where the money was going, so I went into them. Next group down, other specialty retailer. GameStop is a classic short squeeze. I can't buy a short squeeze at this point. It's a mall retailer selling games. Now there's new PS, new PlayStation, new Xbox. Maybe that explains the excitement in GameStop. They now get royalties on mail order, I believe, as well, because that's where you go to play the games before you buy them, apparently. I think this thing is a short squeeze, and I suspect it's not going to stay up here, and I wouldn't be buying it. If I went down the list, then the index, I usually don't go buying below the index. Tapestry looked interesting here. Way above the 50, but a sideways move into the 17. I would look for more momentum. It did have a person buy signal. Party City, another one, bit of a flag. Is it ready to break out? Perhaps. All right. Application software, changed index group. Hard for me to buy BlackBerry, especially up here. Old name. I think it's mostly a technology, patents and some software solutions. I may not like it, but it gave a great opportunity on the pullback to the 50. This would have been too flat. I wouldn't have taken that. Salesforce, not yet, but close. I think Salesforce is a good buy here. Notice how price has dropped and relative strength has gotten better. On Friday, we had a squeeze. 2 days ago, we had a mobile breakout. We had a pocket pivots. We had kahunas. I'd like to see a person buy signal. I'd like to see us take out the chandelier and the 50-day moving average. Here's that group strength line that I mentioned wasn't beyond the S&P 500. I think this is coming. I wouldn't buy it yet. Appian, here's a stock that went sideways to the 17-day like some of the others and broke out from there. Again, it's already broken out and gone. I wouldn't be chasing it. Probably my stock of the year, besides the energy stocks, or one of them had to be Digital Turbine apps. I thought they made engines. Apparently, they're more involved in advertising online and serving up, and creating efficiencies in that business. Maybe trade desk type of a company, and same broken record. All right. Here's a big run up to $8. I'm not even paying attention. Here's a reversal down here. I'm not paying attention. Didn't find it here at $7. And then somewhere it's going to come. There we go. And here's making my scans. $31 stock. Uptrend. Strong pullback to the 50. And boom. Now, actually, I did get back into it back here in the closer to 20. And why did I get into it? I got into it on this day. A new person buy signal, a pocket pivot, second kahuna in a row, mobile breakout from a squeeze, and I'm still long. This was my biggest position at the end of the year. It's had a beautiful run. Apps, Digital Turbine. Crazy name. Another stock that I have a big position in that I've had for some time, and this is in my portfolio. I showed it on a webinar about my portfolio that I started January with 3 stocks in, and it pretty much doubled without me doing anything. Tandem, Diabetes, SE, and a biotech. And, you know, back down in the 30s, this was a huge buy. And look at what it's done. Hard to buy something like that today, so why bother showing it to you? Another renewable energy story is in group number 5. I don't know much about this group. Solar power solutions, agricultural customers, but it looks like the rest of the solar plays. Is this all about Biden's win? Maybe, but they started moving in October, September, 6 to 10 weeks before the election. I think a green wave is coming. And you have a number of small stocks that I don't know. Here's Clearway Energy. You know, these stocks give you the same exact setups. Back down here, pull back to the 50. I don't know this company. I'm not in this company. So when I'm not tired, I would go through every one of the top 10. I'm tired now, so I'm going to skip ahead. Biofuels, another one. This has got some real interesting players too. Small stocks. Gevo, Advanced Biofuels Company. It looks kind of like that wind company. Did nothing for a long time. You can see more happening on the weekly chart and breaking out. Kind of like lottery tickets, but so was Plug at one point. So I go through the top 10 groups. I also go through I remember I told you I take all those lists and I combine them in a major list. So this week that major list had 815 stocks. I looked at every one of these stocks, and then I built a buy watch list from this list. Palantir is one that I've been in ever since my neighbor Kathy was hawking it, and took forever. It went sideways, and it broke out nicely on Friday. Hopefully she's still in it as well. And then from this, I cull it down to a buy watch. I'll show you my buy watch here. I think the best thing I can do is put this on this group and rank by industry group and show you the stocks that I'm looking at for this week. Now, what does that mean? It means that in TradeStation, in Thinkorswim rather, I've got a market watch scan. I'm going to put my buy watch. I got too many indicators open, so I got to start closing some. They must be on one of my other machines. Let me go to buy watch. So I've already loaded them here, and once I clean up my other machines, these will all populate, and I'll have my various buy and sell signals popping up here, and I'll be able to watch these during the day. In TradeStation, it's called Radar Screen. Here's Radar Screen, it's TradeStation. So I'm able to put my indicators across the top and look for changes. So first thing I'll look for at probably 10 o'clock will be which stocks have gapped up enough to be a viable gap up. Come on, Jeffrey, don't mess this up. Hold on a second. I screwed up a little bit. Oh, you're not going to let me do it. Well, the stocks that meet the criteria, what did I do here? I guess I just made it too skinny. There we go. There we go. So right away, I'm going to get all the stocks that gapped up on a day. Come up to the top stocks. Come on. I guess you're not going to cooperate. All right. I don't know why you're not cooperating. Let me try it again. All right. So right away, the stocks that have the big gap ups will come right up to the top. My combo stocks is the IBD Live Watch List, the Mike Scott Focus 3 list, the IBD 50, the Weekend Review, the MarketSmith 300, stocks that I own, some person buy signals, and my buy watch list. So I'm able to monitor them to see if anything's happening. So this tells me the ones that have had the gap ups. and then it tells me what they're doing from a volume perspective, and I know when their volume is high enough to trigger a buyable gap up signal. If I want to know what stocks are moving from a volume perspective, I just have to double click on this, hopefully. Come on. Well, under normal times, that's all it will take for me to do that. I don't know why it's not doing today. Probably got too many things open. And I'll bring up the different stocks with their leading volumes. So I can monitor a large portfolio. Let's just go back to that list. Were there any stocks that I really wanted to point out? Denali Therapeutics has been a very exciting biotech stock. Big run up. Notice it's pulled back to the 50. It's right below the chandelier stop. It's right below the PSAR dot. It just has nothing down here. So that's a buy watch. I put that on my watch and I'm looking for momentum. I'm looking for some of my blue and green indicators to fire. But I've liked this for a while. I've looked for a time to get into it. This might be a good time to get into it. Wait till you get the signal. We talked about Regeneron a few weeks back and said it was a good time back here. It's had a run. It's probably done. Maybe it runs up to the 200. Maybe it keeps going. It's just less easy to buy it here than it was there, but it's still on my buy watch list. I think it could run up to that 200. Corsair Gaming. This is an IPO that I've been watching. Looks kind of interesting. Why? It's pulled back to the 50. It's in a squeeze. It had a pocket pivot this week. It's something that I think looks interesting. I'm going to watch that. What does that mean? It means I might set a buy stop above the high of the day and see what happens. Home Depot, we talked about last week as setting up, pullback to the 50, and it broke out. This is exactly what you want to see. And what I liked about Home Depot was the price was falling and the PMC was getting better, so there was a positive convergence. I don't like Cena because I'm not a friend. Well, here's another stock, Atlas Corp, investment management. Why do I like that? Sitting on the 50, it had a kahuna, turning positive here. Something I might watch. It has a squeeze, see if it breaks out. Cena, I have a hard time with these Chinese gaming stocks, although SC is one of them. It's got no upward momentum, but boy, it's got mobile breakout from the squeeze, a new person buy signal, a pocket pivot, and a kahuna. So a lot of the things that I like to see. Quidel was one I've been talking about the last couple of weeks of great earnings per share growth, just waiting for it to break out. It's broken out. It had a big move, especially if you've got options, calls on it. One of my old favorites, Tandem Diabetes, is setting up again. It's sitting on the 200 and on the 50. Mobile breakout from the squeeze. New person buy signal, pocket pivot, and a kahuna. Look at the PMC. The stock was going sideways and its relative strength was getting better. That's a very positive thing to look for. And then lastly, let's just finish with my pullbacks to support with momentum, or pullbacks ready to run, which is where some of my best buys have come from. And let's look at this real quickly, and then we're going to say goodbye. Salesforce, we already looked at. Viva Systems, sideways move. It's kind of junky in here and loose, but look what happened to the relative strength. Has turned positive as it's gone low to sideways. On Wednesday, mobile breakup from a squeeze, lots of kahunas. I'd like to see it break out perhaps above this point to show it's not in this congestion anymore. Here's the industry group, but this one looks compelling. Viva. This is a battery company. Pull back to the 50. All right, just to finish up, I had a few minutes of, or a half hour of interruption. Solo, it's an EV company. Remember, I don't want to buy the first move up, pull back to the 50 and breaking out again. I'm not sure I chase. Actually, I'm already in it off of this move here, pull back. It looks like it wants to go again. Look at the industry group strength. Halozyme, been in this one for a long time. You can see where there were plenty of opportunities to get into the stock on pullback to the 50s. I mean, this is the optimal buy right there. Mobile breakout from a squeeze. Stock was in uptrend, sideways move, ran into the 50 and bumped up. And that's what this does over and over again. It's a little bit extended here, and that would be a reason not to chase it. Overstock, big run up, pull back. Does it not look like it's going to run again? Again, it was probably a better buy a couple days ago here, but it just looks like it's a nice setup right there. Flextronics, only reason why I made the pullback because it went sideways here. Not an expensive stock, has earnings, looks like it's ready to break out again. Patterson Corp's a little bit loosey-goosey, sideways move, but squeeze, person buy, pocket pivot, Kahuna, an IPO, Unity Software, pulling back into the 50. Upwork, I'd rather have bought it back down here. It just looks like it's pulled back and setting up ready to run again. You know, this market's run a lot. It's hard to find perfect setups. We've looked at these. Genmark, a little loosey-goosey, but basic uptrend here. Squeeze, new person buy signal, pocket pivot, and Kahuna. I showed you Tandem. Core Logic, it looks like this is a buyout, but it looks, I'm not sure if it is or not. I couldn't tell by looking at it. Looks like it's breaking out here at a squeeze, new person buy, mobile, a pocket pivot, and a Kahuna. Mr. Cooper, I thought they were a tire company. It looks like they're a specialty finance. Pullbacks to the 50 have been good buying opportunities, not quite to the 50. Put your buy stop above the PSAR, mobile breakout, pocket pivot, a person buy, and Kahunas. Starwood broke out, sideways move to the 50. This is probably more of the classical ones that I like. Equity, the downside on this one has just been in a downtrend, but look at stock down, person market catcher less negative, so you got bullish convergence. Mobile breakout from a squeeze a couple days ago, squeeze persists, person buy, pocket pivots, multiple Kahunas. That's a strong signal as well. So those are some that I like. And I break them out into different categories. I have some that are waiting for a signal. This is one that looked interesting, Perkin-Elmer. And let me just pull it up in TradeStation because I think you can see it even better. This one's not giving you the 50, but there's a clear trend line support there. So I'm going to pull up Perkin-Elmer in TradeStation, PKI. And notice how here's a automatic generated trend line. Pull back to support, buy signal in a run, sideways move, pull back to support, buy signal in a run, pull back to support, and a buy signal. So you're sort of buying a Darvis box in an ascending trend. You're buying off support, so that looked very interesting here as well. I love charts. I love looking at charts. That's how I make money, is finding good buy points on charts. Anything here that looked really interesting? I think Store Capital was another one that looked interesting here. Similar story, pull back to support with a buy signal, getting close to support on the weekly as well. So I gave you a lot of suggestions. I think that I'm going to be in the camp that this market's going to go higher. I do believe we got some pauses to refresh and some small corrections. I am going to have my BDIs looking for that Hindenburg omen, which would tell me it's more. I'm also not a cowboy, and I really feel like I should take some gains and put them away because I've got some big taxes to pay, but it's nice when my gains in January will pay off the rest of my taxes. So have a great week, and talk to you next week. Goodbye, everybody.